Alrighty, just so you know guys, we've just swept Asian sell side. So I'm going to make this some kind of like live stream. For me in Australia it's 6:06, so it's a couple minutes in. This was a nice little trade, obviously before any time frames, but we reacted from the breaker block. Right now what's happening, we're sitting in a 5-minute busy, right? And obviously we're just seeing how this candle closes, because if that's the case, I mean, there's sell side liquidity resting at these lows. That's probably ready for taking. And it looks like that's the buy side of the curve. Now we're getting to the sell side of the curve. So that's the interesting part. There's also fair value gaps down here. So if one of those things where if you do take a long, I mean, we've taken our Asian sell side, and that actually happened before London Open. So in that case, I'm kind of thinking, what else could be happening? We could return to this area here, this CB, and then continue to sell off to this level of sell side liquidity, unless we already take it, unless we just sell off already. But that's kind of what I'd be thinking at this point. Only because we tried here to go up and we respected this bearish, I guess, fair value gap like that. So we respected that CB. And then we've got another CB here, which potentially might be a breakaway gap depending on if we return to it or not. I'd be curious to see how we trade in that. So if you could go for like a short, for example, maybe at around this point, your stop would have to go above that fair value gap candle, which should hold price, and then you target, a 1 to 2, or you target that sell side liquidity. So that's something I'd be interested in doing, something like this. So I'm going to set a limit order for 17701.00. Stop loss at 17705.75. That's if we want to return, and roughly risking about that much, right? So that's a limit order, and that's set, so you guys can see that. With the idea that this sell side liquidity is a drawn liquidity. Am I going to hold for the full 1 to 4? We'll kind of see what happens at price. Obviously with fair value gaps, bearish fair value gaps, you want price to respect the consequent encroachment. So, if price is really bearish, we won't even return to this. And we technically did, right, with one little tick. So technically we did, but this is the next strong liquidity in my opinion, this sell side. If I look at the 5-minute, have a look at what price is doing. We're about to close below this 5-minute gap. To me then, that definitely means we have to take out this liquidity point and at least this liquidity point. We have to take out at least one if we close below this 5-minute fair value gap. That then should hopefully act either as an inversion, or we return to this CB and we get a nice little entry there and we go short. So that's kind of what I'm seeing. So yeah, we've closed below that for sure. What you could do here, because that's the inversion fair value gap, we can make note of that. There's also a CB here, but again, it looks like at this point we're just kind of selling off. So we're going to that sell side target, and then from there we'll just kind of reevaluate, see what happens. So a lot of this is like a waiting game. Obviously, if you got filled there, let's say you got filled there, or your market executed, say you got filled around here, stop loss above that high, that would roughly be a 1 to 2. You'd be at break even probably by now. So you can just see we've taken out this level of sell side. So we've just taken up 1 point of sell side liquidity. But yeah, that's the reason, or that's how I kind of knew we were going to head lower, because we disrespected a 5-minute gap. So at minimum, we should have been able to take out this level of sell side. And this one's sitting very close to, right? So they're kind of both there in my opinion. We've left breakaway gaps at this stage, like price didn't even return there. Essentially, we returned to this CB. We created some kind of internal structure raid here. So that's like an internal raid. And then we kind of inversed this fair value gap here. Right there. And obviously then you can go short, but it depends, right? Depends what your entry criteria is. So that's kind of what we're watching. So again, I'm going to get rid of this now. That's irrelevant for me at this point. So again, yeah, we've taken all this sell side liquidity. There's some more resting down here. I'd be curious to see what that is, if that's any time-based liquidity. So that one there is from the PM session, macro. Obviously below here, we've got a fair value gap there too. but we're just going to see what price wants to give us. So again, that's kind of the tape read of what's kind of happened here. A bit earlier, we took out this level of buy side liquidity. So the rate of buy side liquidity, we've had our shift and everything. So, you know, at the moment, we're just kind of watching price action. So there's a lot of waiting going on here. This might have been an entry for you, right? If you believe we're going to take out this sell side for a trend continuation model, you could have gone, say, short when we traded back in, stop above the CB or above this fair value gap or above that high, and then obviously targeted your 1 to 2. That would have worked okay. So now we're going to come back when something important happens. We've exited the macro, so the macro has ran lower. Now, the only thing that for me I could see as being a long position would be this would be accumulation, this would be manipulation, and then we get some distribution after, but we're just going to have to wait and see what price wants to give us. So all I'm going to do now, I'm going to get rid of this sell side liquidity because this is the most recent. It just makes it easier instead of having all this stuff on the charts. Now, what would I want to see here? I'm just going to go to the 2 minute. I'd kind of want to see this 2 minute fair value gap inversed unless there was like many other confluences to go with. So that's kind of what I'd be looking for. That fair value gap on the 2 minute, what hasn't even formed yet, we've got 7 seconds, right? So I'd want to see that inversed. 3 seconds, 2 seconds. That would be like the confirmation that we need to see. And then maybe, that's the thing, like maybe we get a pull back into here and then we look for, you know, a different position. But that's kind of what we'd be looking for. That there is right now it's a 2 minute CB until we break it. So I'm going to make that red, the actual box. It's a 2 minute CB. So obviously there's liquidity below, but that's the main liquidity. So if we're going to continue lower, there's a big imbalance here, but this would be the point if we are going to reverse, that we do reverse. So eventually I want to see this act as like an inversion fair value gap. That's ideally what I want to see, right? So if you're curious, that's what I want to see. I'm just going to look on the 30-second time frame too. Nothing really there. Like we did inverse this one here on the 30-second, right? But we're just kind of seeing what price wants to do, because a 30-second often isn't enough unless you've got multiple confluences. So we need to find some kind of respect in this zone. That's what I'd like to see. Otherwise, obviously, we take out the next swing low. We just continue lower, and that's how the cookie crumbles. So obviously, we want that to be an inversion, but it doesn't have to be because we've got about 8 seconds left on the candle. So the only thing supporting price now is this as a rejection block, right? Which means the bodies would need to close above the 0.5 level if we're going to use it as a rejection block. Otherwise, that's your sell side, right? So again, the 30-second is not all the be all and end all, but we'll get the buy kind of ready to go, and we're just going to see how the candles kind of react at this point. 17678.75. Depends how we react here as well, right? So I'm just getting this ready just in case. Because we need obviously respect the zone, and obviously we only want to risk 0.5%. And this is not like convincing to me just yet. So I want to see how this candle closes. There we go, see? So you don't make, I guess, judgment straight away. You let the market do what it wants to do. And again, in my case now, we've broken past that low. So now I'm just watching to see how we react. On the 30-second time frame, this is obviously sell side. If we're going to continue lower, then these candles here, right, should support price to the downside. So that'd be interesting to watch. Obviously, we respected this 2 minute gap. There's a 1 minute gap here. So again, I'm just looking for price signatures. If I'm going to go long at this point, or for this session, I'm looking for things to be, I guess you could call it, disrespected. Right, that's the best way to put it. Looking for things to be disrespected. This, you'd want to see treated as an inversion fair value gap. And what I'd be curious to do is have a look at ES and split the charts here. So if we get ES up, just to see kind of what ES is doing at the same time. ES, it's got this low that I might want to search for. So we might keep going lower until we take out that low. That's like quite close on ES too. So that, I guess, is what we're watching. And I'm just going to pull that across. This here is not an inversion just yet. So we're going to call that a SIBI. And again, until we start disrespecting these bearish PD rays, I'm going to hold a bearish stance. So that's where I'm kind of at. So again, yeah, I do use ES. People ask me, do I use SMT divergence? Sometimes, right? But at the moment, you know, it could exist. If ES doesn't break this, low, then yeah, there could be a massive SMT divergence if it doesn't break the low. But in this case, all I'm seeing is the Nasdaq respecting these bearish PD rays, acting extremely bearish, leaving all these, you know, breakaway gaps. So that's what I'm seeing. So really, you know, if you're trading price action, this would have been a trade for a trend continuation. So I've talked about that briefly. I'm going to talk about that, I think, in the next masterclass too, right? It's something I like to forward test as well, especially when we've had this initial delivery. Now, the only issue here is that we've taken our Asian sell side already. If we hadn't taken our Asian sell side, well, somewhere here, it would have been nice to get in on that. But you can see how this macro has then reacted. The macro from 150 to 210 has then taken out sell side and distributed pretty much down to the other sell side liquidity point. So again, this is kind of what we're watching. We're just watching wicks, we're watching fair value gaps, we're watching all these price action signatures to see what happens with price, right? So again, ES still hasn't taken out this low. Don't know if you guys can see that. I might actually just move this over for a quick second just so I can explain. On ES, this is the low that Nasdaq's already taken out. So if we get a reversal here, that could be SMT, which technically means you should trade on ES. Personally, I prefer trading on the Nasdaq just because it's what I'm comfortable trading. And I don't like how the bars look in London session. Like, it's just it's not clean, you know what I mean? So at the moment, there's some SMT. Will it hold? Who knows? We'll kind of have to wait and see. We have formed a swing low there, but so see what happens. If we can close above this, I'll treat this as an inversion fair value gap. Right, and it would be obviously a position to go long. Stop loss below this candle, 17675. And we'd probably only want to be in with 3 contracts. So risking about, okay, so we're closing above that. I'm going to enter now. So that's entering off an inversion fair value gap. Stop loss is below this low. If we trade back into this busy, if we form a busy, then that will obviously be my second entry for a long position. So I'm just going to mark all these things out for you guys and just kind of show you why I'm entering the trades and what I'm doing here. So essentially, we're taking out sell side liquidity. This week I'm treating as a rejection block because we took out this level here, right? This level here. We hovered around the 0.5 level. We immediately rejected 2 candles afterwards. And now we're hoping to potentially get another entry off this area here. So if we just set a limit order potentially, 17682. So 17682 with a stop loss at 17676. So we'll set a limit order there. See if we get tagged in. We'll do it at the start of the fair value gap, just like this. So that's the start of the busy. And then our stop loss again is going to be below here. And then obviously they'll adjust what we're doing here so then we can take our profits where we need to. This CB would be a nice place to take profits if we're going to go long. So essentially, you know, there's a couple of confluences here to take this trade. This is kind of what we're working with. We've got a raid, we've got a rejection block. And again, this is all live. So the reason why I entered one position already is because price doesn't always have to return to it. You know what I mean? It doesn't have to. It doesn't have to return to this busy, which actually is only there. It doesn't have to do that. So that's kind of what I see. This is a swing low now, so that's going to get moved below this swing low. Just so we're risking about that amount. But we've got a rejection block here, which is nice. What are we aiming for? Well, we'll just kind of see if we get tagged in. If we return to these first, then I'm just going to cancel the buy limit order.
But again, this buy limit has two PDRAs stacked on top of each other, just so you can see. But that's kind of what we're working with at this point. And it looks like that SMT is kind of holding as well. So for me, if this was the only position I was in, right, and this obviously is what I've done for my stop loss below this low, you know, I'll be looking to take some partials out, definitely this CB, you know, probably take out, you know, a contract there. And if I get stopped at break even, I get stopped at break even. We'll see what happens with price. So that's completely fine. Just so you can see, let me just get rid of these things. Just so you guys can see, and I can mark some things out. So that's your rejection block, that wick. When we break above this candle here, that there's a change in the state of delivery, right? So I'm going to mark that out too. I'll just put that on the right. Have we got a market structure shift yet? Nah, not technically, but we've had rate of sell side liquidity, important liquidity, time-based liquidity. We've had another internal rate, a rejection block. We've had a change in the state of delivery and a few other things that you can see on the charts there. So let me just get this up for you, just so you can see. Again, our buy limit's been set here. This stop, I'm going to move up as well in the same position, because really we shouldn't need to come below that again. That there is a swing low, right? That's a swing low. So we're just kind of mitigating our stops as we go. And then we'll see what the risk to reward is if we do get tapped into this next trade, which we're quite close to, right? I like this idea, right, of forming 3 relative equal highs, because that there, we know that's going to be some kind of drawn liquidity for the market. We know that the market likes to target these things. So having a bullish bias for this intraday trading, that's one of those things. And really this, let's have a think about it. Let's put that there. We got tagged in, there we go. So now it's kind of what we're working with. So in terms of like risk to reward and whatnot, this is kind of what we're doing. So doing a long position, stop loss below this wick, 1 to 2 is roughly about here. So if you wanted a 1 to 2 risk to reward, you know, that's roughly what we're getting at, which is just below that CB, which is also nice, right? That's also nice to see what price is doing. So that's that. I'm going to get rid of some of these things now, just so we can kind of watch the chart and have a look at the chart. Right, so that's what we're looking at the moment. I'm going to get rid of this thing. We know where our 1 to 2 is. Get rid of this for now, just to keep this nice and clear, just so you can see what price wants to do. It might even set a sell limit for that area, just confirming what it is. So we'll set a sell limit for 17698.50, just so you can see what I'm doing at the moment. 17698.50. 17698.50, and that's going to be with 6 contracts. So we'll get that up, ready to go. So that's at 1 to 2. So now everything's kind of in place. Don't need that anymore. Don't get confused about this. Just know that this whole candle is the rejection block. I've just used the wick, right? So this whole candle here, if I can mark it out, yeah, that there is the rejection block, right? It's that one there. We've had a change in the state of delivery, and we've had an inversion fair value gap, and we've had also a bullish gap, and this down close candle is an order block, right? So I'll make that a bit bigger because you can't really read that, but that's an order block too. So that's also a positive or a bullish order block. We really want to see it trade past these highs. That's what we're looking for the price action to do, and that's kind of what we're rolling with at the moment. So just got to have patience and see what happens from here. So right now, kind of what we're looking for, and I'll just get rid of these things, clear up the chart a bit. Obviously, we return to this bullish gap. There's an order block. Price could dig into that. We want to see price respect the median threshold of the order block with the bodies of the candles. That would be nice and effective price delivery. We might come and tap back down here. That's completely fine. But this there is obviously going to be a drawn liquidity because we've formed, you know, relative equal highs, right? So what's kind of happening here is we've taken out that liquidity. We've formed that SMT, right? And we're tapping back into that zone. So that's kind of what we're rolling with, I guess, at this point, right? So just so you can see, we're tapping back into that order block, right? Now I'm going to get rid of this. That's the rejection block. I might just leave up the halfway point of that, of the rejection block. And then what I'm going to do, I'm going to get the halfway point of this order block. And let me just get that up for you guys. So that's the median threshold of the order block. So I'm going to write all these things and then zoom in on the chart a little bit just so you can kind of see. I'll draw my own lines while we're kind of waiting for price action to do what it wants to do. Just get rid of that. Get rid of that. So that there, just so you can see. Might have to make this a bit smaller. That's your median threshold of the positive order block. And we'll zoom in a little bit, guys, so you can see. That's the median threshold of the positive order block. And this is the, I'm going to call it, you could call it the consequent encroachment. I'm just going to call this the 50% of the rejection block. So I'm going to summarize that rejection block. I'm going to call that positive 2. So that's kind of what we're working with, those two things there. And yeah, that's kind of what I see as supporting price. There was a very similar trade before, right? And for me now, like I might edit this to 6. That way I've just got one thing to worry about. And then what I can do, I can actually adjust the other one. So I can get rid of that, adjust this one, and then we should be all sweet, right? So that's kind of what we're doing at this point. You know, sell stop, where was it? Right here. That's completely fine. Obviously we need price to breach past this area. That there's our 1 to 2. I think that's roughly about a 1 to 2. But this is how I read price, right? This is what I do with price action. I'm just going to fix this line and put it on the actual order block, and I might make that a little bit thicker, right? So you can see that. I'll make this blue just so you can refer to the actual rejection block, and I'll make the text blue as well for you guys. There you go. This busy, let's make this green. Let's just make it all pretty, right? And this inversion fair value gap, we can see if we can make it this color. I don't know if it'll look nice, but why not? Let's just do it. So you can just see there's different things. This I'm gonna make black. That's fine. Where are we? There we go. Right, so that's kind of what we're working with at the moment. And again, we're using that the macro has rated sell side just after the macro rated that sell side liquidity. We don't need that anymore. We can get rid of that. We then had another rate of liquidity here, right, which is on a micro scale. So just zooming in so you guys can see, we took out this swing low. It's a swing low because this candle's low is lower than this one and this one, so that forms a swing low. Then we had a candle with a massive wick that took it out. So I measured the consequent encroachment or halfway point. Yes, we came down, we breached it, but the next candle's rejected from this. That was the first, I guess, inkling. And then when price came back up and then we retraced back in, then it gives you another opportunity to enter from this inversion fair value gap and this bullish gap. So that's kind of where we're kind of sitting at this point. So now we're just watching price action and we're seeing what price wants to do, right? The only thing that could be concerning here is that, you know, we've had some accumulation here and we've stepped back down. But what I like about this trade is that we actually have a framework to go off. And if I grab my Fibonacci, even if I just use, if I use that swing high to that swing low, right, and then I mark out 0, 1, and the optimal trade entry ranges, look what sits in the optimal trade entry. It's this SIBI. So, you know, ideally I'd want price at least to take out the sell limit, and then we, you know, obviously get the 1 to 2 risk reward, and then that's it. You know what I mean? We get out of the trade. If the price wants to keep going up, it keeps going up. If not, it doesn't matter. At this point, we'll probably be around break even, but we still got to show that price wants to displace higher. So it can get quite messy on the charts because now there's also another bullish gap, right? That's right here. But again, you've got the underarching things, or the underarching, I guess, fair value gaps that are supporting price. So it's sometimes hard to read. So I'm going to leave that there, but if this kind of is confusing, let me know for the next video. But I just want to show you like the different PD arrays and how I kind of judge it, because if one gets disrespected, I just look at what's being respected. And right now there's a rejection block, there's an order block,
and there's a fair value gap. That's what's being respected, right? So that's kind of what I'm going to do. And there's obviously equal highs here. They are going to hopefully act as a magnet, right? Hopefully these equal highs are going to act as some kind of magnet or like a drawn liquidity, right? So the way I see this is price is just tap down again, tap back down into the order block, which is this candle here, and that's completely permissible. Alrighty, so now we're just kind of watching price action, letting it do its thing. So we're just kind of watching price. Obviously it's tapping back into that inversion, and I'm just going to extend these out in time. This one I'll bring back in a little bit. I think it's probably better, to be honest, to have black text because you can't really see it, right? Let's just map that out here. So yeah, price is taking its sweet old time. Obviously I want it to, you know, breach above these highs here. Silver bullet's in like 20 something minutes. So, you know, if we could get a return here before silver bullet, or maybe silver bullet makes this push, and then later on, you know, we can target that. So that's kind of what I'm seeing here. Once we break these highs, ideally, then what I'd probably be doing is I'd be moving my stop loss up a little bit more. Again, I just created one sell stop. No rate of liquidity with this wick, so it's not a rejection block. This is a rejection block because of rate of liquidity. That's why I call it a rejection block. So that's kind of what we're basing it off. And again, these are relative equal highs. So relative equal highs, you can see that there. And we're just kind of tape reading price. So it's a little bit boring at the moment, so it's gonna wait it out. The analysis I think is there, like I've explained why I've entered the trade, where I've entered from, what I'm using as a confluence, and that's what I'm rolling with. That I'm going to keep in mind too, and also that I'm going to keep in mind too. So I'm going to display those a bit further out in the charts as well. Alrighty, so we're back again. We're just going to touch base when some things happen in the market that we like to see. There's a lot of kerfuffle going on here, a lot of nonsense going on here. So again, I don't trust that this is going to move higher just yet until we get a nice little break to the upside. This displacement leg is nice, right? It is nice, but we need that to hold and for those equal highs to be taken out. Again, the sell limit is as where it is. That's a 1 to 2. The goal is roughly about 1,000. So risking about 0.5%. I might be risking a tiny bit more on this trade. So if we get slightly under a 1 to 2 and we get roughly to about 1,000 and we look like we're going to reverse, then I'll close the trade. But if not, we're going to hold it to this level. So at this stage is what we're watching. Obviously, we're seeing if there's going to be a bullish gap formed here. There's so much going on here. I think I can get rid of this now. I might just screenshot this. And I'm going to... So I'm just going to screenshot this. I'm going to put this in the Discord and I'll be back in just a second, guys. Alright, so we're back. I'm going to actually get rid of this. Right. I'm going to get rid of this. Well, I might leave that there. Just anything that's kind of in the way because there's quite a lot going on here. And I want to like mark out the newest thing. So I might fade these out a little bit. Just fade them out just a little bit. They still exist, but they're not the most recent, if that makes sense. That's kind of what I'm doing here by fading them out. And I'm going to mark out the more recent kind of PD arrays that we're looking at here. So again, the goal is roughly 1,000, which would be almost a 1 to 2, give or take. That there is another bullish gap, right? So you can see that. Might increase that in terms of its darkness. And kind of we're seeing how we react at this point, right? That's kind of what we're doing. So again, we're creating like 3 equal highs here. Obviously, I don't want to treat that as resistance. I want this to be taken out, right? I want this point to be taken out, this point to be taken out, and this point to be taken out, right? They're 3, or actually 4 really, if I mark that out. They're so close to each other, right? So if this trade is going to work out as it is, then we should be able to bounce higher from here somewhere and then move past these highs. If we're going to have another case of this, then yes, right, we might come up a little bit and then go down, or we might leave these for later on. And what could be happening is we could be having the sell component of the market maker buy and sell model. So that's kind of what I'm watching at the moment. Again, that's what I see as the drawn liquidity for now, so I'm sticking to my bias. Obviously those highs are going to be something that's important. That's obviously the initial inversion, right? There's a bullish gap right here. Now I'm including the volume imbalance. So if I just show you that here, I'm including the volume imbalance. So from this candle, let's see, from this candle's high to this candle's low, there's a volume imbalance there, which is this like small thing here. Right, that there is a volume imbalance. So that's another one of ICT's PD rays. So that's technically a volume imbalance, but he always talks about including those when you draw out bullish or bearish gaps. So my entry here, you know, even if you got an entry now, would have been roughly in this bullish gap area. Obviously, you know, you see the reactions first and then you enter based off that. That's kind of why my entry is where it is. You can see what's kind of going on there. We're going to get rid of this because we don't need that. We're including the whole thing. So we don't need this anymore. And this is a bit of a longer video. I'm not too sure how long this is going to go for. So I'm trying to stop it as we kind of have nothing important, so I can make this a more sustainable video to watch. If you don't mind the long recording, then that's completely fine. But again, this is all live in the moment. You can see here, right, market's open. We've got the ticker on the side. So that's kind of what we're doing. And what we need here is just the halfway point or the consequent encroachment. So ideally, we want this bullish gap to hold. That's what we're looking for, because we've had this massive displacement now. Ideally, we want this busy to hold. That's what we want to see. This is obviously a protected low. If you wanted to, you could do like something like this, right? Just to manage your risk if you wanted to. The interesting thing is we're so close. You know, we've tapped there, so I might just leave it roughly about here for now, which is below 50% of the rejection block. And again, the goal, just so you know, right, and this is for most days anyway, for me it's risk around 0.5% to, you know, about 0.75%, just depends what I'm doing. Risk around 0.5% and aim for roughly $1,000, which equals 1%. So that's equal to roughly a 1 to 2 risk to reward, or close by, or close to, right? That's kind of what I aim for. I just find it works better, right? So that's kind of what I'm watching. And I might just make that a bit larger for you guys so you can see. But yeah, that's kind of what I do. Up to you what you do. Some people risk less. That's completely fine. So yeah, we're just going to see what happens with price. Again, we're going to close this if we get to 1,000, or we might close like 5 contracts and then we can mitigate the rest, right? These are the relative equal highs that we're watching. So again, we're just leaving, I guess, the things that are important for us here. So we've got 22 seconds on this candle. We'll see if we can break past that. We've already respected this busy. So if you want to, you can reduce your stop loss. And we're about 3 minutes from a macro. So this macro is either going to deliver for us, or it's going to take out a stop loss, because it's going to take out this level of sell side. So that's the way I see this. There's obviously always 2 scenarios, but that's kind of what we're aiming for. So at this point, that's kind of what we're doing. Alrighty, so our stop loss obviously has been moved here. Why has it been moved there? Because we've got, I guess, multiple lines of defense. We've got the bullish gap, we've got this inversion gap, and we've got this busy. So now there's like, if I draw all these things out, there's multiple defense lines. So if they all get broken, then that's it. You know what I mean? Like, I'm putting it below all of these PD rays. Now I use orange to mark out the inversion fair value gaps. That's what I do personally, right? I use green to mark out the bullish gaps. Blue is usually rejection blocks or breaker blocks. But now there's like multiple PD rays supporting price. So my stop loss is below all of those and below the median threshold of the order block. You could just put it right here again if you wanted to, but again, we're getting quite close to a macro, right? So I'm just going to get rid of this, right? Just to see what's more relevant. And I'm going to draw some lines up. And all we're going to do here is we're going to get rid of the, we'll leave the positions, we'll get rid of the orders until it becomes important for us, right? Again, If we reach roughly about the 1,000 mark, we're probably going to take off 5 contracts. We might leave a little bit of a runner to see, if price wants to go there. But we just tag those highs by the tick, right? So it's one of those things. So again, we're just watching price action here. And I guess we're waiting for the macro, which actually we're in the macro at the moment. Let's have a bit of a look. The macro has just started. So a vertical line here. We'll draw another vertical line here. So 250 to 310. Obviously 3 o'clock's the start of silver bullet. That there's a macro, so we're going to mark that out in time, just so you guys can see. Put that in blue. This is the 2:50 a.m. to 3:10 a.m. macro. Just make that a little bit smaller. So that's what we're kind of working with here. So we'll see what this macro does, and then obviously we'll come back in silver bullet hours and see what the price wants to do. So again, we're in this macro. We've just returned to that busy, and obviously we've closed below 0.5. But I'm just going to get rid of this. I want to show you guys something as well. See how we've closed below 0.5, but we've rated liquidity here. And let me just fix this up. I might make this a little bit smaller for you guys too, so you can see, or bigger, I should say. We've actually came back into that busy, and we've rated liquidity. That's exactly what I like to see, right? That's exactly what I like to see. So essentially, we come back down, we rate this liquidity. Yes, we disrespect the 0.5 level, but we rate liquidity. So we've actually gathered liquidity, and we've rejected back to the upside. So that's what I like to see. That's nice price action delivery. Right now, it looks like in terms of our mitigated stop loss, we're risking about 0.5% at the moment, right? So that's kind of what it is. So we've mitigated that, and again, we'll get rid of this for now because I want to just manually do it myself. But again, if you're curious as to what I'm doing, that's what I'm doing. And again, these are the equal highs. I want to see how we trade past them. How do we trade? You know what I mean? That's what we're looking for. And there's 7 minutes until the silver bullet, so we might just come back in a few minutes, unless something important happens here, and then we'll touch base. So essentially what will be happening when we reach about 1,000, I'll be taking off 5 contracts. I'll sell back 5 contracts, wherever that might be. And then after that, we'll review the trade, and we'll see if we can hold 1 contract. You know what I mean? So that's kind of what we're seeing at this point. But we'll get this kind of ready to go. Again, silver bullet is in like 7 minutes. So obviously those relative equal highs, we've swept them. But the question is, what happens now, right? So we knew that was going to be a drawn liquidity. But what happens now is the question, right? And let me just flick through different time frames. We're sitting in a 2-minute fair value gap here, a 2-minute bearish gap. So we'd need that to be broken to the downside, or the upside, I should say, to allow price to move higher. Otherwise, we could just be rating liquidity here and then rejecting to the downside. You get me? So we're just reading price action as we're kind of going through, and then making an informed judgment. In terms of this, obviously we'll be selling 5, which I'm assuming is probably around here, 17695. 17695. 17695.50. I'm assuming that'd probably be around that $1,000 mark. So we'll set the sell limit for that, and we'll just see what price is doing roughly around that point. So that's what we're looking at. And yeah, we'll see what price wants to do. This, obviously, I want to treat that as an inversion fair value gap, but we'll see what price action wants to do, and we'll come back shortly when something else happens. And we might have mitigated our stop there, and we'll see what happens, but obviously that's what we're aiming for, and then we can adjust things as we go along. Alrighty, so we'll just get this ready, because I feel like, this probably can get mitigated at this point. Right, so let's do that. And let's get ready to sell back 5 contracts. So we're going to sell back 5. There we go, just as I said. Modify that order.
And you know what, let's go risk-free, cover that cost. And let's just see where price wants to go. So I hope you guys have enjoyed this so far. It's one of those things. Let's get rid of that. We're sitting in that macro. I like that. I like how we delivered price there. So that's really, really nice. I'll be curious to see how we act in this zone here. And now we're just kind of tapering this session. Right, so we're touching base again. You know, we're happy with any outcome here because we've taken our position off that we need to. And silver bullet is happening in a couple seconds. So slight drop down. This, remember, this was actually a 2-minute bearish gap. So it'd be nice to see that work as an inversion fair value gap. So let me just get rid of this line. So remember that was the 2-minute bearish gap. I'll just see what price wants to do. Well, we've come up. I wonder if we've come up to equilibrium already. That's what I'd be curious to see. So if I grab my Fibonacci, we haven't quite reached equilibrium yet. We're close to it, depending on what you class as a swing high. But that's what we're kind of looking at. So at this point, it's either stopped out at break even, a little bit of profit, or we just ride this baby higher. So that's kind of what we're looking at. So that's what we're watching with price. Obviously, you expect some volatility here. We're still on a macro too. So that's kind of what we're looking at. We might even tap into this again, who knows, right? But again, I'm going to be out if that happens. So we're tapping back into that busy. And again, being satisfied with what we've done here. So any profits from the market are better than nothing. So now what I'll be kind of watching is we need to, you know, well, we need to go back up again. Essentially, if we leave a bearish gap, and if we leave a wick, then we need to disrespect this. Otherwise, it's probably just another little pullback and then another drop down. So you can still make money going against the trend, counter trending. You just need to have multiple confluences, and then you need to have a clear exit strategy or an exit plan. So because we're approaching silver bullet, I know that silver bullet or the opening can create some volatility, which is exactly what's happened here. So I've mitigated, you know, my stop loss and everything to make way for that. That's all I've done, right? Just so you guys know. And there you go. So we're out now with a little bit of profit. And essentially now we've rejected all these points. We had this massive sell-off. We've just rated, you know, this point of sell side, and then we've obviously left this level of sell side liquidity here. Right. So again, just so you know, those are the trades we took on the upside. During this macro, this is really what delivered this to our first target of $1,000, and then we moved our stop to break even. We left one runner just in case price wanted to go higher up. But again, I think I mentioned it before, but this looks like the buy side of the curve and this looks like the sell side of the curve. So ever since this movement, you know what I mean, we've been selling lower, lower and lower. Could you go long from here? Maybe, right? Depends if it fits your entry model. So let's kind of have a think about that. If you went long from here, where would you place your stop? Probably below one of these lows, or maybe below this low. What would happen, I wonder? You need quite a large risk to reward if you did that. You need to reach that civvy. If you put it below here, it wouldn't require as much, right? So sometimes just the fact of the matter, I'll stay on this for a few more minutes just to see if we take out this sell side, then we'll call it a day. If we continue higher, we'll continue to taper it, but that's kind of what I'm seeing now. We've returned to this candle here. That's a breaker block. This candle here. And what's interesting, on the 1 minute, we've closed above this 2 minute gap. Let's see what the 2 minute has in store. On the 2 minute, we have closed above as well, which is quite interesting. So we're just going to watch price action now. And just so you guys can see, you can see my executions here, right? When we create an inversion fair value gap, you can see my next execution here, which is back in this bullish gap here, right? And you can see my sell position. So there's one sell position there and one sell position there. So if you have a bit of a look, say you get an average of roughly about here, this was roughly a small scalp that we took. You know, roughly where do we take the position off? Roughly about there. So it's roughly 1 to 1.25. Keeping in mind that we've already had bearish order flow, right? We know that. And if you have a bit of a look now, we just swept this low. So we're just going to kind of see what price wants to do, but we're displacing back into this range here. So
again, we've taken liquidity. There's liquidity above, but we are in the bearish order flow. So we're just keeping that in mind. But I thought I'd show you guys that too. And until next time, I'll talk to you then. If you want more videos like this, let me know. I'm working on a model that's going to be a trend continuation model, like I mentioned a little bit earlier. So, you know, this here, this technically now is a rate of liquidity, right? When did that happen? During the macro, we had a shift, an inversion gap. We broke past here. Then we took out this level of sell side. Similar thing here, right? So you can see we've already initiated the bearish order flow. So if you're taking counter trend trades like I was here, you've got to make sure that you're managing your risk and you have a realistic risk to reward. Originally, I was going to take profits here, but you could see some, I guess, we didn't want to move any higher. Like we came and tapped into this order block, which is this green candle, this whole thing, right? So we tapped into this order block here, and we didn't really want to go any higher from there. And if I measure out like the halfway point of this order block, this is just a quick illustration too. We wicked there, but the bodies didn't even close above it. We rejected. We tried once, twice, 3 times, 4 times, 5 times at 3 o'clock, but immediately rejected. So we pushed into there, we dug into that order block, and then we came back down. So again, this then was the sell side liquidity, or this swing low. But that again is how you do, I guess, intraday scalping against the trend. If you trade from 2 o'clock onwards, you probably would have missed this trade here too. This was in the macro from 150 to, what was it? 150 to 210. So this is something I heard ICT say in one of his recent videos, one of his live sessions. 10 minutes before and 10 minutes after the start of any new hour, there's a macro. And look what happens in these macros. Price does something. In this macro, price does something. In this macro, price did something, right? It delivered to my target here, and it also came back down and took out the sell side. Look at this, every single hour, and it's not always going to be this clean, right? But there's always opportunities. This is obviously before the session, but even here, we've got an entry from a breaker block to go short, to take out Asian sell side. So that's something we're going to be talking about later on, probably in a masterclass. I might make another video on it. And obviously, if you stayed this long in the video, thank you. So you get this little bit of extra information that I've been kind of back testing and forward testing. And here today is a good example of how you can kind of see that working. But yeah, until next time, guys, if you have any questions, leave them in the comments and I'll talk to you then.